Good morning, traders. It is Wednesday, June 19th. Taking a look at the charts, we got the SP 500 futures. We got our trend analysis chart. We are in an uptrend. Yesterday, we had a nice big pop, a big gap up into overbought territory. In fact, if we look at the volume ratio on the NYSE, which is this red indicator here, it ended up spiking way up, still holding up above 4. More or less, if this red indicator is above 3 and we get over this red hashtag, we tend to be in an overbought territory and everyone is piling in the same direction. And this is kind of telling us that everyone is expecting, it seems to be everyone is expecting a rate cut. They're piling into stocks, they're moving into precious metals yesterday. And what does that really mean? Well, if we take a look at this um, economic indicator table, if we look at the price action here, the first column is interest rates. What is going to happen with the interest rates? Well, yesterday we saw the stock market move up. Yesterday we saw precious metals move up, the price of gold. That usually means that the interest rate is going to go down. Now, everybody is kind of anticipating that, so it's going to be real volatile session. If we do see these rates go down, then we're probably going to see the equities market and metals continue to move up. But if they stay the same, I don't see the rates getting raised. But if they stay the same, we're probably going to see the stock market sell off and probably metals move back a little bit. So overall, we're going to see a real volatile session going forward here. Nobody really knows what the Fed is going to do. It's always a crapshoot, and it's going to create some really wild price action. And more times than not, when we have the Fed speak, we'll see some huge move before, and then during the day we could see some huge move. But usually by the end of the day or 2 or 3 days later, if we do get a spike, we could see big red bar, see it sell right back. We are into major resistance. The market is overbought on several different occasions. Short term sentiment and previous pivot highs in the market. So things are going to get real choppy and volatile. We may see short-term rally, but I do feel as though the equities market is still starting to struggle here, and we could very much so see metals pull back as well. If we take a look at gold, look at our gold analysis chart right here, the 30-minute, more or less the market is flirting and showing volatility in this upper range, right up in here. We've had a huge gap and sell-off, then we had a gap up, another big gap up, a gap down. It's got some pretty decent gaps everywhere. Another big gap and sell-off. We had a couple big spikes up into this range and it sold back down. More or less, this red hashtag is dipping us into overbought territory. So gold is struggling. It is at resistance. And if we take a look over, let's go to the weekly chart of gold and just look at these resistance levels. Actually, I'll zoom in a little bit more. We got lots of different resistance levels on this chart, but more or less, if we were to just go across these highs right across here, you can see we are right at significant resistance. Each time we've met these, we've seen some pretty big selling. So we could very much so start to see gold pull back, potentially consolidate in here for a little longer if we don't get if the rate isn't cut, and eventually I think it's going to break out and have a decent run. But at this point, everything is at resistance, and if we don't get a rate cut, we're probably going to see gold pull back pretty quick down back to this blue line or potentially even a little bit lower. But overall, that's where we are in the grand scheme of things. Gold is still trying to carve out a bottom. It's still under resistance. It's got several different areas it has to get through. So I wouldn't be surprised if we see it pull back and consolidate a little bit longer as it tries to take a run through this resistance level. Taking a look over at silver, again, all the metals will probably move in sync together. Silver holding up in this little pattern, but overall we could very much so, this is the weekly chart, we could very much so see some type of spike in either direction and for it to kind of work itself out over time. I mean, I don't think gold is really set to explode and rocket here at this point. I think gold, silver, and miners are going to struggle at resistance, carve out more of a bottom before they really start to break out. We got a bottom here and we're coming back down. We might see this continue to chop around before it starts to potentially break out and start to break some of these longer term resistance levels in the market. Now, if we take a look over at energies, natural gas up 0.5% this morning. I'm going to go back to the daily chart. You can see here natural gas testing these lows. It still looks bearish. We've been talking about it, trying to put in a bottom here. It is putting in a consolidation pattern. If it breaks the downside, it is a consolidation pattern. If it breaks the upside, it'll be a bottoming formation and start to move up. At this point, still looks really bearish. And we do tend to see big sell-offs in the stock market. We tend to see natural gas perform well. So natural gas is at support. It's showing a little bit of life this morning. It did shake down low this morning. It's bounced back. If the stock market sells off today on the Fed, we could see natural gas move back up to the upper end of this range. A breakout from this pattern, I think we could see a fairly decent move in either direction. It'll either be a significant breakdown or a significant rally back up to this 250 area, which is pretty significant resistance on the chart as well. Looking over at crude oil, it's relatively flat on the day, but yesterday posted some pretty decent gains. If we look at our trend analysis for more or less crude oil, it's been in this downtrend. We got into some overbought territories. The market pulled back again to put in a potential little double bottom here. It's bounced back up. We are back into overbought territory. We're up near this 20-day moving average as well. You can see on the daily chart the last time we had a candle like what we're seeing right now, the market pulled back in a pretty big way. So overall, crude at the upper end of this range, this resistance range here, and it is overbought, and it's got a little bit of a pattern looking like today, tomorrow we could see crude continue to go down. But if it does break here, we're probably going to see a nice run. The next resistance area will be somewhere up here around the 57, which is more or less just a visual of this low. You take this distance here, you can measure that to the upside. That's your kind of momentum move for this W formation potential bottom here. It's also a level where the market came down and kind of traded through this area 3 times and will act as a resistance zone. Now taking a look over at the chart of bonds here, oops, here we go. Here's the chart of bonds. Bonds continue to be in an uptrend, very similar to gold in terms of they keep rallying and then selling off. We get push up and then it sells off, a big gap up, it sells off. Yesterday, just flirting up here, moving much like gold, a big spike in the morning, a sell off, a rally back up. We're up at this overbought hashtag mark. You can see the price action here, this upper wick is somewhat of a bearish sign. We are still holding up above the 5-day on the daily chart, which is a good sign. But if we start to break down below it, then we're going to really start to see it collapse. The next level will be the 153, and then it's got potential to work itself down much lower going forward to continue to consolidate, because we've talked about this a few times. If we take a look at the chart of bonds, we are in this type of phase here where we could see a multi-month pullback or pause in the market. We've got this new high and then it consolidated for 1, 2, 3 months. Then we pushed to a new high, consolidated for 1, 2, about 2.5 months. Here we are at a new high. It could very easily consolidate for another month or two before it pushes up to a nominal new high again. So that's where we are in the grand scheme of things. Taking a look over at the dollar. Actually, let's look at all the currencies over here for 1 second. Here are the currencies. It's going to be interesting to see how price moves. More or less, the dollar at this point, it looks like it's slowly kind of starting to break down. It's starting to make some potential lower highs. It's got a lower low. We've got a move to the downside. You could argue this could be a potential bear flag, and we could see the second half of a breakdown if rates go down today. Then we could see a pretty big sell-off, which would spark the rally in precious metals. We've got other currencies that are obviously the inverse, more or less, showing signs of a bull flag, that the euro could pop and start to extend. So going forward here, you even look at the Canadian dollar, same thing, potential bull flag that could extend. The yen moving up, series of bull flags. So we're starting to see some other currencies start to come to life the last month and a half. They're starting to reverse, and the dollar's starting to look like it's reversing to the downside. So we'll see where things go today, but obviously a rate cut should eventually send metals much higher, as the dollar will more or less have probably put in a top, and we'll see it struggle while precious metals start to shine. Anyways, that's it for now. We'll talk to you in a little bit. Bye-bye.